Hello everyone, it's Alex Suslov, Head of Capital Markets at AD Mortgage for our AD Weekly Digest. Conventional rates remained pretty stable in the past week at 5.13% and non-QM is at 7.7% today. As I have mentioned in our previous digest, there is definitely some light in the tunnel for non-QM market with increasing liquidity, which would stimulate eligibility easing in the coming future for non-QM programs. As for macro overview of the economy, we still see high retail spendings growing about 0.7% in the month-over-month figure, which indicates US consumers still have strong spending on general merchandise when the gas consumption is down and oil prices at the end of the day are going a little lower with gas demand going down. Aside from that, we had Fed minutes released from their previous meeting, and we have Billy Abrams, CEO of ADM Securities, to give us an overview of Fed projections and also an overview of the market events for this coming week. Hello Billy, how are you?
Hello Alex.
Billy, can you give us some overview of the Fed minutes and the Fed projections in the coming meetings? And also, given the inverted yield curve, how do you think that affects the treasury rates today?
So yes, in general the markets this week, let's first talk the news in particular, economic news in general. By my count, we had 12 economic indicators come out this week. One came in right on the screws. 6 of them were a little bit bearish, 5 of them a little bit bullish. And as you might figure, rates are up a little bit, 3 to 5 basis points. Not a big deal. As far as the FOMC, well, let me address 2 things on the numbers that came out. Probably the 2 most interesting were Empire Manufacturing Index, which came out on Monday, and the Philly Fed Index, which came out Thursday. They're very similar indices. They're both compiled by the Federal Reserve. The New York, the Empire State Manufacturing Index compiled by the New York Fed. The Philly Fed obviously compiles the Philadelphia Index. The New York Index was expected to come in up 6. It came in down 31. You don't have to understand how the index is made to know what a miss that was. But oddly enough, the Philly Index was expected to come in down 5. It came in up 6. So it speaks to confusion. It speaks to numbers that are not telling any of us what's really going on. And these are numbers that are compiled by the Fed themselves. So then we get the minutes to the last FOMC meeting. And what they told us is what the Fed told us is that they will continue to raise rates until inflation drops significantly. And after that, they said they would consider slowing the pace of rate hikes until they were sure that they had contained inflation. Never once did they mention anything about bringing rates back down. We have a meeting coming up in about a month, end of September. Fed funds figure to go to 3% then, possibly 3.25%. But then there's a meeting the first week in November and another in December. So very likely by year end, we're going to be talking 3.50 to 4% Fed funds. The yield curve is perfectly inverted from the 2-year out to the 10-year. And even if it's going to stay that way, you'd figure that we're going to see 5 and 10-year yields move higher. Printed their low yields August 2nd. They immediately spiked up, and since then they've been going sideways to slightly higher in yields. And the way the slightly higher in yields is happening is they rally and sell off and rally and sell off. And while the sell-offs aren't any bigger, one after the other, the rallies are getting shallower, and consequently yields are creeping up. And I expect to see that probably accelerate going forward. That's it for now. If you want to keep up to my work on a daily basis, come to me at billy.abrams@admortgage.com, and I'll put you on the distribution list for the updates. And with that, I'll kick it back to Alex.
Billy, thank you so much. It was a great overview. Looking forward to the upcoming market events aforementioned and Fed's meeting in September. Thank you everyone. It was Alex Suslov, Head of Capital Markets at AD Mortgage for our AD Weekly Digest. Stay tuned and make sure you sign up to our YouTube channel to stay on top of our market updates and weekly webinars. And make sure you sign up to Billy's market updates. Those are great. I love those. Thank you. Bye.